Good morning, it's Harvey Jackson. Just there's quite a few different things I'm going to cover here, but China potentially buying North America wheat. They buy Canadian wheat, but it's been a while since they bought U.S. wheat. Here's just a quick excerpt, but you can see wheat actually had a pretty good trading session there yesterday, and especially the Chicago and the Kansas. The Minneapolis seems to be the last wheat to maybe catch that rally, but it's following the trend with the other two for sure. ADM cuts profit on weaker crush margins, and I think I had mentioned that before. The crush margins are going to get hurt when you have the seed going up and the meal and the oil not going up in the same percentage, but the meal is going up, but the oil is doing absolutely nothing. So that and one of the main reasons why all these crushers are getting started is for the renewable fuel space, and if the oil it doesn't make it in there with a higher price, then the crush margins are probably getting impacted even more. Um, there is some glimpses that the U.S. government shutdown might stop here. So look forward to some U.S. Numbers coming out, and everything will be delayed. I think there was even a report yesterday that the November USDA report will be out. I think a week later rather than on the 10th or 11th. It's going to be a week later than that. It's election day in some of the states, and if you want to get under Trump's skin, some of these are bothering him a little wee bit because some of the potentials definitely look like it's going to be very uh, leaning against Trump's push to try to get specific people in there. Dollar gains as traders upgrade rate outlook. So they're basically saying that the U.S. Following Powell's rate decrease last week, that there isn't going to be a rate decrease this coming month or next month. And it's putting some worry in there, but a lot of it is because of delayed in data and no government reports and numbers coming out. Panama Canal bets on liquefied natural or gas to offset the trade shutdown because they charge a fair bit, and they're actually trying to get a pipeline built. I bet you they get the pipeline built before Canada can even get off their butt and get anything done here. But they can see that they're betting on getting, um, you know, that the next 20 to 25 years it's going to be a very valuable product, and so be it. Like they're betting on 20 to 25 years. We can't even get anything done in the short time here. Looks like the government or the court case that's in the Supreme Court is going to pass, and it's even an Obama appointed judge that has written an opinion piece how it is legal. You got to listen to this.
I was talking to a veteran. I said, I'm not going to run the poppy thing anymore because what's the sense? I live in Mississauga. Nobody wears, very few people wear a poppy. Downtown Toronto, forget it, downtown Toronto. Nobody wears a poppy. And I'm not going to. He says, wait a minute. How about running it for the people that buy them? Now, you go to the small cities and the road.
I thought I would just show a little bit of expert. The other noise, for whatever reason, didn't catch, but that's fine. What I was just talking about is that it's going to be a budget day or budget release day for the Liberal government, and um, it's I don't know if it's going to pass, but if it does, it's going to be because NDP members are going to be all of a sudden sick that day, I think. Here's your weather that's coming through and you can see there's snow, and there's actually weather warnings over there for winter snow storms. You can see there's storms going across the Saskatchewan. Manitoba. Just have a quick look at the market here. The canola is down 780 from its climb that we saw yesterday. You'll see it in the charts better. Rapeseed is down. Soybean oil is down, but it's just below the 50 cents. Palm oil is slightly up, but this weakness here is actually going to contribute more to the canola issues that we're seeing than the actual soybean itself. Soybeans trading 1 penny, 1.5 pennies up at 10.43. Spring wheat just basically unchanged, and the other wheats are down by a penny to a penny and 3/4. Milling wheat is slightly up, and oats is up 5.5 cents, and corn is down 3.25 cents. U.S. dollar, or the Canadian dollar, is down slightly as well, but some strength in the U.S. Dollar index though. So you can see we've had longer candles here, but we're basically just chopping sideways here, below the 100-day moving average and the 200-day moving average. Basically doing nothing, waiting for some news probably. But when you look at the carry, and so you basically, I just blanked out this month because it's not telling us anything, but $11 difference between the Jan and March. Full carry is 13.14, so 83% carry at 7% and 10 cents per metric ton per day. That will pay for you to push your grain into the forward months. So if you got January, you can look at the February, March kind of timeline, or if your timeline is delayed for whatever reasons, you got holidays booked or anything, you could look at the May timeline there as well. Still paying 78. My rule of thumb is anything over 70% is usually paying for your interest at the very least. Canola futures on November. Same thing there with all the candles, fairly wide candles, but it's actually under the 100-day moving average, but trading right through the 200-day moving average, which is the dark blue line. Your European rapeseed got above the longer-term moving averages, but now looking like it's going to fail here potentially. $133 differential between European rapeseed and Canadian canola, priced in Canadian dollars. So $133 more expensive. I don't think it costs that much freight to get there. Soybean oil. This is the chart that I'm paying the most attention to for direction for canola, and a break here will cause some market movement there. Crude palm oil, again, the other complex that's pricing oil internationally, because crude palm oil makes up 2/3 of, between 50% and 2/3 of the market on export sales, and then soybean oil, and then canola is half of soybean oil, which is unbelievable when we say that we want to move up our sales here. Here we are, soybean futures, first red day so far, but that doesn't mean that it will stay that way. Here's your natural gas, or your diesel fuel, actually just chopping sideways, basically at the same values that we've seen since July, basically. Let's have a look at the Canadian dollar. 4 red days in a row here, so or 5 red days in a row since we've gotten our rate decrease. Euro, same idea, and the U.S. dollar index is starting to gain. So what that does is actually put some pressure on the Canadian, or the Canadian priced U.S. priced products. So anything that's U.S. priced, like your wheats, your soybeans, and everything, as the U.S. dollar goes up against all the basket of currencies in the world, it gets less price competitive. Let's have a look at wheat. Spring wheat, no big market move up here. But when you look at the Chicago or Kansas, it's above the 100-day moving average, and looks like it's going to try to make its way back to the 200-day moving average, which would be a great thing if it did. It would definitely change the momentum, because that's a momentum shift if you can get above that. And the same thing with your milling wheat. It's just above the 50, but not at the 100 or anywhere close to 200 here. Corn, though, it's above the 200-day moving average, and this longer trend line looks like it wants to breach it. And if it does, we're up in that 455 kind of range is the extension area. oat futures, beautiful move here, up 5.5 cents. And that's all I have for you today.